My name is Alex Massa, and in this section, I will take you through the ratio analysis for Wynn Resorts. Ratio analysis is a quantitative method of gaining insight into a company's liquidity, operational efficiency, and profitability by comparing information contained in its financial statements. Ratio analysis is the cornerstone of fundamental analysis. Ratio analysis involves evaluating the performance and financial health of a company by using data from current and historical financial statements. In this portion, we will look at Wynn's liquidity, leverage, profitability, and activity ratios. We are comparing it to their global industry classification standard peers for their global and North American reach. The GICS function is found on the Bloomberg terminal and is used to classify competitors by region and likeness in business. Ratios are an incredibly powerful tool because they create a standard measure across each metric. The leverage ratios that were used in this analysis were debt to equity, total debt to total assets, and total debt to EBITDA. Leverage ratios are a way to compare the capital structure of different firms. Every firm relies on a certain allocation of debt and equity to grow and operate on a day-to-day basis. These ratios measure the amount of capital a firm has in the form of debt. This gives you an idea of the probability the company will default on their debt payments. Comparing Wynn's debt-to-equity ratio to their North American peers, it is the third highest behind Penn National Gaming and Caesars Entertainment Group. Among global peers, Wynn Macau is the most levered firm, while Wynn Resorts is the third most levered firm from the sample peers. Total debt to total assets measures in percent the amount of total debt relative to total assets. This allows investors to compare the level of leverage across different companies. Comparing Wynn to its North American peers, their ratio is just above the peer median. But when compared to its global peers, it has the third highest ratio measure behind Wynn Macau and Caesars Entertainment Group. Total debt to EBITDA shows a company's ability to pay off its incurred debt. This ratio measures the amount of generated income that is available to pay down debt before covering interest, taxes, depreciation, and amortization expenses. The higher the ratio is, the greater debt load a firm has. Comparing Wynn Resorts to its North American peers, the debt-to-EBITDA ratio is just above the median, whereas when comparing it to their global peers, it has the second highest debt-to-EBITDA ratio, only behind Genting Malaysia. Profitability ratios are metrics used to measure the firm's ability to generate earnings. The profitability ratios that were used are return on equity, return on assets, return on capital, and return on invested capital. Return on equity measures the firm's profitability by revealing how much profit in percentage a company generates with the money shareholders have invested. Compared to their North American peers, Wynn has returned 38.39% to shareholders, which is the second highest, just behind Churchill Downs. When compared to their global peers, Wynn Macau and Wynn Resorts have had the highest returns, 247.6% and 38.39% respectively. Return on assets is an indicator of how profitable a company is relative to its total assets. This ratio gives investors an idea of how efficient management is using its assets to generate earnings. Comparing Wynn Resorts to their North American peers, they have the third highest return on assets. Against global peers, Wynn Macau has the second highest return on assets, while Wynn Resorts falls just below the sample median. Return on capital measures in percent the return that an investment generates for capital contributors. It shows how effective a firm is at turning capital into profits. Comparing Wynn Resorts to their North American and global peers, Wynn is well above the sample median. Return on invested capital assesses a company's efficiency at allocating the firm's capital to profitable investments. Essentially, this ratio gives investors a sense of how well a company is using its money to generate returns. Comparing Wynn Resorts to both their North American and global peers, you can see that Wynn is well above the sample median. Activity ratios measure a firm's relative efficiency based on its use of its assets. Investors use these ratios as a way to determine a firm's ability to convert different items on the balance sheet, such as inventory, assets, and accounts receivable, into cash or sales. The activity ratios that were used are inventory turnover, asset turnover, and accounts receivable turnover ratios. Inventory turnover ratios show how many times a company's inventory is sold and replaced over a given period. When comparing Wynn to its North American and global peers, their ratio is just above the peer median. The asset turnover ratio is the amount of revenue generated per dollar of assets. This ratio serves as an indicator of the efficiency at which a company is deploying its assets. Comparing Wynn Resorts' asset turnover ratio to their North American peers, it has the third highest, only behind Tropicana and Great Canadian Gaming Corporation. Comparing to global peers, Wynn Macau has the highest asset turnover ratio, while Wynn Resorts places just above the sample median. The accounts receivable turnover ratio measures how many times a business can collect its average accounts receivable during the year. Comparing Wynn Resorts' accounts receivable turnover ratio to both its North American and global peers, it is the sixth largest out of the GICS sample. Our ratio analysis of Wynn Resorts concludes that it is a healthy company. The amount of leverage this company has is unsettling, but it can be explained by recent events. These include the construction of the Wynn Encore at Boston Harbor and the nearly $800 million loan Deutsche Bank provided Wynn to settle the sexual assault lawsuits. Wynn Resorts' management team has effectively used the firm's assets. This is shown by the comparison of their profitability and activity ratios between Wynn Resorts and their peers both domestically and internationally.